Over $500 million gone in one afternoon. That's what happened to crypto traders 3 days ago. More than 150,000 people got their positions wiped out in a single day. People who thought they had a smart setup. People who probably spent hours researching which coin to buy. And you know what's wild? A completely different group of people sat through that exact same crash, the same chart, the same volatility, the same chaos, and felt absolutely nothing. No panic, no margin call, no 3 a.m. checking their phone. The difference wasn't which coin they picked. It was the wrapper they used to hold it. And that's exactly what we're unpacking today. Because if you're thinking about getting crypto exposure in 2026, or you already have some and you're not totally sure what you're holding, this video might be the most useful 10 minutes you spend this week. We've got 3 ETFs, FBTC, BLOK, and BITO. One of them is genuinely great, one of them is clever but misunderstood, and one of them has a hidden flaw that bleeds your money every single month, even when Bitcoin is going up. Let's get into it.
Okay, real talk. Have you ever actually tried to set up a crypto wallet? Like, properly. Seed phrases, private keys, writing down 24 random words in the right order and storing them somewhere safe, but not too safe that you forget where you put them. It's genuinely stressful. And one wrong move, one misplaced word, one phishing link, one moment of bad luck, and your money is just gone. Forever. No customer service, no fraud protection, just gone. There's actually a guy named James Howells who threw away a hard drive back in 2013. Normal thing to do. Except that hard drive had Bitcoin on it. Bitcoin that is now worth hundreds of millions of dollars. He has been trying to get permission to dig up a landfill in Wales for years. Still hasn't gotten it. I'm not saying that'll happen to you, but I'm also not saying it won't. Point is, most people don't want to deal with all that. They just want the upside of crypto without turning their financial life into a cybersecurity project. And that's exactly why ETFs exist. When the SEC gave the green light to spot Bitcoin ETFs back in January 2024, it was genuinely a big moment. Suddenly, you could buy Bitcoin exposure the same way you buy Apple stock, in your regular brokerage app, in your IRA. No seed phrase, no cold wallet, no landfill risk. But, and here's the thing that nobody really slowed down to explain when all the headlines were celebrating. Not all of these ETFs are doing the same thing under the hood, at all. And the difference between them is the difference between a clean, simple investment and one that quietly eats your returns while you're not looking. So let me introduce you to the 3 main players, and I promise by the time we're done, you'll be able to explain each one to a friend in about 30 seconds.
Imagine 3 different ways to bet on a gold rush. You could buy actual gold bars. You could buy shares in the mining companies, the equipment makers, the logistics firms, all the businesses built around the gold rush. Or you could buy a contract that promises you gold at a fixed price next Tuesday. And then when Tuesday comes, you swap it for a new contract for the following Tuesday, every single week, forever. Those 3 options are basically FBTC, BLOK, and BITO. FBTC is the gold bars. Fidelity buys actual Bitcoin and holds it on your behalf. When Bitcoin goes up, you go up. When it goes down, you go down. It tracks Bitcoin almost perfectly and charges you a small annual fee for doing so. Simple, direct, no surprises. BLOK is the mining companies. BLOK doesn't hold Bitcoin at all. It holds stocks, companies built on top of the crypto economy. Exchanges, miners, blockchain software providers. You're not betting on the coin. You're betting on the industry around the coin, the infrastructure, the shovels. It's actually a pretty interesting idea when you think about it, but it comes with a catch we'll get to in a minute. And BITO is the weekly contract. BITO launched in 2021 and broke trading records on day 1. Financial media went absolutely wild. Millions of people bought it, thinking they were basically buying Bitcoin. They weren't buying what they thought they were buying. And that gap between perception and reality, that's the most important thing in this whole video. But first, let me give you the full picture on each one, because the devil is really in the details here.
FBTC, the straightforward one. Here's what I like about FBTC. It doesn't try to be clever.
Fidelity buys the Bitcoin, Fidelity stores it, and unusually they store it themselves rather than outsourcing to a third party. You own a slice. Your return mirrors Bitcoin almost perfectly. That's the whole product. What happened on February 28th this week was actually a really good real-world demonstration of why this matters. Bitcoin dropped hard, really hard, and then recovered almost all of it within hours. FBTC holders just rode it. No liquidation risk, no margin call, no sleepless night. Just a volatile day that ended roughly where it started. For long-term believers in Bitcoin who want the cleanest, cheapest way to hold it in a regular account, honestly, FBTC is a pretty easy recommendation. But what about people who like crypto but aren't totally sold on Bitcoin specifically? What if you think the whole crypto economy is going somewhere, but you're not sure Bitcoin is the winner? That's where BLOK gets interesting.
BLOK, the ecosystem bet. Think about the internet in 1999. You probably couldn't have told me which specific websites were going to win, but you could have told me that the internet as a whole was going to be massive. And if you'd invested in the companies building the infrastructure, the servers, the software, the payment systems, you would have done pretty well, even if your specific website picks were wrong. That's the BLOK thesis. Don't pick the winning coin. Invest in the whole ecosystem. It holds companies like Coinbase, blockchain software firms, crypto analytics businesses, even some traditional financial companies that are pivoting into the space. Real companies, real revenue, balance sheets you can actually read. The honest catch is that BLOK gets hit from two directions at once, when crypto crashes and when the stock market crashes, both at the same time. In rough years, that double exposure really hurts. It's not a hedge, it's actually a double bet in some ways. But for someone who wants crypto upside with the familiarity of owning actual companies, it has a logic to it that makes sense. Okay, now for the one you really need to understand.
Let me tell you exactly what BITO is doing under the hood. And I'm going to use the Tuesday contract analogy because it actually explains it perfectly. BITO doesn't hold Bitcoin. It holds futures contracts, agreements to buy Bitcoin at a certain price on a future date. Every month, those contracts expire, and every month, BITO sells the expiring contract and buys a new one for the following month. Here's the problem. In most normal market conditions, the next month's contract is priced slightly higher than the current one. So every single month, BITO is selling something a little cheaper and buying something a little more expensive to replace it. Sell a little low, buy a little high. Every single month, for as long as you hold it. That cost is called roll cost, and on its own, in any given month, it's small, almost invisible, but it compounds month after month after month, and over a year or two, it creates a real gap between what Bitcoin actually did and what your BITO position actually returned. Here's the part that actually gets me though. BITO launched before spot Bitcoin ETFs were even allowed. Back in 2021, it was literally the only option if you wanted Bitcoin exposure in a brokerage account. So it made sense then. People weren't buying something bad, they were buying the only thing available. But now FBTC exists, and FBTC does the job BITO was trying to do without the leak. So if someone right now, in 2026, tells you BITO is just as good as a spot ETF for a long-term hold, they either don't understand what they're recommending, or they really, really need you to buy it. I'm just saying.
All right, let's make this really practical. You're a long-term Bitcoin believer. You think Bitcoin is going to matter in 5 or 10 years. You want the simplest, cleanest way to hold it in your regular brokerage or retirement account. You don't want to think about seed phrases ever again. That's FBTC. Full stop. Low fee, direct exposure, and this week proved it can handle a major geopolitical shock without falling apart on you. You're crypto curious, but not Bitcoin obsessed. You believe the whole crypto economy is going somewhere, but you'd rather own companies with actual business models than a volatile digital asset. The idea of reading a balance sheet is more comforting than reading a white paper. That's BLOK. Just know what you're signing up for. It's crypto equities, not crypto itself. Different animal. You're a short-term trader. You want to make a 2 to 4 week directional bet on Bitcoin price movement. You're not holding long-term. You understand the roll cost and you've done the math on whether it matters for your time horizon. BITO can work for that specific use case, but go in with eyes open. And if you're not sure which category you're in, honestly, that's fine. Most people aren't. But knowing the difference between these three structures means you can make the decision consciously instead of just clicking buy on whatever shows up first in a search.
Here's what I keep coming back to after this week. 3 days ago, the biggest geopolitical shock in the Middle East in a generation landed right on top of the crypto market. Bitcoin dropped. Hard, fast, brutally, and over 150,000 traders got liquidated in the process. And yet, the fundamental case for crypto didn't change. Within hours, Bitcoin was recovering. The people with clean, long-term positions and well-structured ETFs rode it out without drama. That's the whole point of getting the wrapper right. You can have the right thesis, crypto is going to matter long-term, and still lose money if you're in the wrong vehicle. BTIO holders with a long-term mindset have been experiencing that quietly for years. Leverage traders experienced it very loudly this week. FBTC, BLOK, BTIO. 3 different tools for 3 different jobs. The coin doesn't change. The market doesn't change. You just need to know which tool you're actually holding and why. Drop a comment below. Which one are you actually in right now? Or if you're not in any of them yet, which one makes the most sense for where you're at? I genuinely read every comment and I'd love to know. And if this broke things down in a way that finally made it click, hit subscribe. We do this every single week. No hype, no price predictions, no Bitcoin to $1 million by Tuesday stuff. Just honest, clear breakdowns of how this stuff actually works.